Hello, everybody, and I want to welcome you and thank you for taking the time out of your day to watch this presentation, which is one of a series that we will be doing from the National Advisory Center for Short-Term Care Information. The focus is for agents who want to sell successfully or successfully sell short-term care insurance. And this presentation is specifically designed for long-term care insurance agents. And as you watch it, I think you'll understand why. So, my name is Jesse Slome, and I'm the Director and Founder of the National Advisory Center for Short-Term Care Information. Our goal is to put short-term care insurance on the map in the United States, advocate for it, provide information to consumers, education for producers. And if you have not already, we just launched a website, shorttermcareinsurance.org. The consumer side of the website is now live, and you can and should take a look at it, because certainly as we start to promote the industry, that is where individuals will be going to gain their information. There will also be a producer side that will be available shortly. Today's broadcast is going to focus on Aetna's Recovery Care insurance product. And what I'm going to do during the broadcast is cover a couple of things, three in particular. You'll see three themes. The first is I'm going to give you an overview of the company, the market, the product, why I think you should be excited and spend the time to learn and watch the Aetna, this presentation. The second is to talk a little bit specifically about your sales opportunities for the Aetna short-term care product. And then the third is I will end with strategies that I believe will successfully help you get started selling this product to your prospects, to your clients, and even in many cases to the folks that you might have talked to in previous periods and who were declined. So first, this directly comes off the Aetna website. Aetna is one of the largest health insurance companies in the United States, and certainly a name that consumers are aware of and respect. You might not be aware that not only is Aetna large, if you see what I have as the red arrow, this is their latest membership, and that really means policyholders. They have 23.5 million Americans who own Aetna health insurance, primarily, or a large number of them are seniors who have their Medicare Advantage and Medicare Supplement products through Aetna. So the market that you focus on as a long-term care producer, your prospects and your clients are very, very familiar with the Aetna name. And now as they merge in Humana, you're going to see they're going to add another 10 million individuals into the family. So very large company, very highly respected, very good ratings, and a long tradition of brand recognition and service. Now, long-term care insurance producers who are watching this, the first question that I have to help you overcome is your preconceived perception about long-term care insurance and short-term care insurance. I want to, and it's not one versus the other. They ultimately are both very viable. But I have to share with you why am I so passionate today about short-term care insurance, and why do I think you need to be. The graph that we're showing here are the actual the numbers of individual traditional long-term care insurance policies that are sold each year. And this doesn't come as anything new to you. The market has continuously declined from about 2000 to where in 2015 there were just over 100,000 individual traditional long-term care insurance policies sold. Now, it's not the fact consumers, aren't looking and saying, well, okay, policies aren't selling, so therefore, we're just not going to do anything. Consumers want to plan. There is greater understanding of the need to do long-term care planning than ever before. But consumers are seeking a solution, and short-term care insurance is a viable option for many, as you'll understand and see. Now, again, this presentation is specifically for long-term care insurance producers, so I want you to understand why we call it long-term care, but the fact is, as I'm going to show you over 2 slides, most claims are not long. And that's really important because for years, the industry has shared, both with consumers and with agents, so much information and so much data about the fact of long-term care and claims and the need that there's sort of a mindset of when you bring up short-term care among many long-term care producers, oh, that's going to be way inadequate. Nobody would want this because, and you can fill in the blank. But here are the realities. 41% of long-term care insurance claims, and that's really a very relevant number because it doesn't talk about the whole general population. I'm going to do that on the next slide. But people that have long-term care insurance and go on claim, that's the really relevant number that you want to know about and focus on, because how long do those claims last? 41% last less than 1 year. So for almost half of the people, and as you can see, many of those short-term care, many of those claims that last just a short-term period of time are for home care. And that's what people want. These numbers are very surprising to long-term care insurance producers. They don't understand because they've read all of the data and they've seen all of the brochures that talk about this risk and this long-term care potential need, and they go, well, why is this? And the reason that 41% of claims last less than a year is because many of the conditions are recoverable illnesses, or they're sudden terminal illnesses where the person dies, etc., or they're single use of benefits. And so at the end of the day, I want you to really understand, it's not that I'm an advocate of one solution versus another. They're both very viable solutions if they meet the person's need and budgets and age and health insurability. But short-term care insurance is a very viable solution because some coverage is always going to be better than none. Let me find my little arrow down there. Now, again, I promised you a second slide. The first slide talked about long-term care insurance claims. This one is general population data. But here again, as you can see, we call it long-term care, but most need is a year, is none. First of all, half of men and almost half of women will not need any long-term care. I've never used that 70% number. I'm not sure. That's really old data, and it just keeps getting out there. This is current and more recent data. But as you can see, only about 28% of people who actually need long-term care will need it of men, and a higher number for women, but will need it for a year or longer. So yes, some people will definitely need care for more than a year, where a short-term care policy might not be sufficient to cover all of their need, but nobody is ever going to complain about getting a year's worth of benefits when they need it. The second thing is, many of the articles and the things, the cost of care studies that go out there that talk about and that we've done, where's your $1 million? Yes, I'm not going to poo-poo it. If you look, 15% of people are projected that their long-term care cost after 65 will be more than $250,000. But look at the chart. Most people have very manageable amounts of claims where a short-term care insurance policy is going to cover exactly what they need. So for those of you that look and say, I think I might be doing a disservice to my clients by not selling them this maximum coverage, I would counter it and say, I believe you're doing a disservice to your clients by not telling them that a short-term care policy may indeed be adequate and will be happy for most of them. So that's a quick overview. We're going to focus on Aetna's newest short-term care policy. Aetna has a number of policies, and when you're appointed through our organization to market the Aetna policies, you will have access to all of them. But the product that I'm going to focus on now is their newest. It's called Recovery Care, but I'm calling it, for the purposes here and for what we do, short-term care. Here's what you're going to really like about ReCare or Recovery Care or Aetna's new short-term care. First of all, and you're going to see the first bullet, I've put it in red quotes, and as I'm speaking here, I'm putting air quotes around it. Consumers today, you know that you have a percentage of your prospects who really, they're not interested in skilled nursing home or assisted living. They're looking for a home care only policy. And while this is not categorized as a quote, unquote, home care only policy, I'm going to share with you a way that you can essentially make it such. Of course, this also works as a comprehensive policy. So you have the option of going one way or the other. The third bullet, this is an indemnity policy. There is nothing like cash. Any long-term care insurance producer knows that, welcomes that, and should be celebrating that this gives you a solution that allows you to tell the prospect, this policy is going to pay you money. You know, it's not going to be a reimbursement of receipts and expenses. Unisex rates, holy cow. I mean, you look around and you go, unisex rates, which is ideal for women on their own, and we're going to talk about that. No extra cost for monthly premiums when you know, a lot of this is information that is shared with me by successful producers who are already selling this product. And one of the great things about it is when you run the numbers, you know, most traditional long-term care insurance policies, if you want to pay monthly to hold down your cost, you're going to pay anywhere from 4 to 8% more than if you did an annual premium. Here you don't. There's no 90-day certification for benefits, and I'm going to spend a minute talking about that because that, for most long-term care insurance producers, becomes a real eye-opener. And the last thing, everything that I've talked about with short-term care has focused on 1 year of benefits, but this policy can actually can be maxed out where it can actually equal 2 years of benefits, and we'll try and cover a little bit of that. So if you go back and you think about that chart that I showed earlier, if you buy this policy correctly and design it correctly, it actually can really serve much more than a year. So the Aetna Recovery Care is currently available in, I think, about 20 states, and we've shown them there. Yesterday, coincidentally, we're doing this broadcast on June 8th, but yesterday the policy became approved for sale in Texas, Oregon, and Georgia. In July, it becomes Kentucky and Utah, and they will continue to roll it out. If you ever have questions or you're watching this at a later date and you want to know if the policy is available in your state, you know, you can call the advisory center and we'll be glad to help you. Oh, as he says, I almost forgot to tell you. I don't have to tell you because you can see this. Issue ages to age 89. I'm going to pause there for effect because I've been working in the long-term care insurance industry for many, many, many years. I can't tell you how often our phone rings with someone who's looking for home health care insurance for an aging parent who is 83, 84, 85, and still in very good health. So yes, this policy will be issued up to age 89, no cognitive test, no medical records. Let that sink in for a second when you start to think about market potential. So this is shot right out of the brochure, and I'm going to always tell you, as everything else, you know, I'm covering things in general. You obviously have to read all the material and understand it, and, you know, and if I've made a mistake, we'll correct it at future times. But basically, here's the essence of how this policy can work. There is a daily nursing facility benefit, which includes assisted living. and an individual can purchase up to $300 of daily benefit for up to 360 days of coverage. The home care is a rider, okay, and you'll see how this policy works and why I believe an intelligent agent can use this effectively to design the policy for their clients. With the home care rider, it pays a weekly indemnity cash benefit of up to $1,200. Now, most people are going to, in my belief, buy less, and that's okay because most home care claims are actually far less than what people imagine or think. And again, some benefit is always going to be better than none. Now, we'll talk in very quickly, still to qualify for benefits, this is and looks very much like a traditional long-term care insurance policy with a couple of big differences. So to get the home care benefits, you first have to meet the ADL or the cognitive triggers, and then all you need is 3 or more home visits of 1 hour or more to do it. And so you have somebody that's, that looks and they've met that, and they're using, 3 or more home visits of 2 hours a day, 4 hours a day, just, 3 days. They qualify for that weekly benefit. And so if you, again, think about it, because consumers understand how to parse their benefits, they've got the cash. They can pay who they want, and secondly, they can keep the cash and use it to basically extend their care if they should be worried about needing it longer. This is really a very consumer-friendly product, and that's one of the reasons I think it's so good. Now, I'm not going to spend the time. I'm going to show you where you can access material and brochures and all of that off the Aetna website. Or if you're watching this recording, you might want to freeze it. But this is the application. Okay, essentially, these are yes/no questions. And if the prospect has, 3 yeses, well, then the application's going to be declined. Now, I will tell you that some short-term care insurance policies have as few as 4 questions, and they have much more liberal underwriting. And so when you have people with significant health issues, those are going to be the policies that you're going to want to recommend. But some policies, this one in particular, is a little bit, is certainly more in line with a traditional long-term care insurance policy. There's a big underwriting guide, and happy to share any of that with specialists who are really using it. But in general, I think that you will find, and the agents who are selling this product will find that it is a little bit or somewhat more liberal in terms of health underwriting than many of the traditional policies. And certainly, don't forget that our age up to 89 issue age, which is really important. Here's what you're also going to like about Aetna's support. Once you're appointed, you go into their system and you can generate, very easily, get material, generate rate quote. So I've put a red arrow here. You log in, you click rate quote, and now I'm going to play around, not live, but I'm going to show you some of the things. Remember, this product is called Recovery Care, so you slide the little arrow to the right that's green. Now, the bottom part will open, and here's how this policy works and why, again, as I've talked to agents who are starting to use this, how they are using it. So there are 3 basic components. The first one is a daily hospital indemnity. That is, and you have to have a little bit of all 3, as they say. So most long-term care insurance producers are not going to focus on a daily hospital indemnity benefit. That's typically not what you're talking to a prospect about. So for purposes here, you can see I put in $10, though people could take obviously more. But most long-term care specialists just never focus on that aspect. They don't have familiarity. If you're watching this as a Medicare producer, you are going to have more familiarity, and you're going to, be recognized what hospital costs might not be covered by Medicare and how that benefit. But for LTC producers, $10. Your daily nursing benefit, I put in a $200 benefit amount with a benefit period of 360 days and an elimination period of 20 days because, again, more and more we're seeing that Medicare is A, there's the coinsurance, and B, Medicare is looking to control some of their costs. Now, we're going to check the optional benefit for the home care benefit, and I've put in $900 a week because that is a fair amount of all the different studies that we've looked at for home care. That's quite a lot of home care benefit. So if you look at the yellow box, basically what you're seeing is that this works out to a potential benefit of almost $119,000. And again, when I talked about the fact that this policy, and I'm putting air quotes around, can be maxed out for 2 years, it's not an either or, it's an and. So someone could conceivably could use their 52 weeks of home care and then also need skilled nursing home care and qualify for both. And again, if you think about it, that's really the same with traditional long-term care insurance. So you could literally get the full value, $294.62 a month for a 70-year-old single woman. How does that compare to traditional long-term care insurance? I basically have, ran some numbers, and what you can see is that it is less than, and you can't compare apples and oranges ever. It's never an apples and oranges comparison. But what you can see is that a short-term care policy for a single woman, because of unisex rates, because of some of those things, is going to be cheaper and something that you should look at. Let's talk a little bit about a way to sell this as home care only, because you are going to come across a lot of consumers who want just the home care benefit. So I go back to remember that you need A plus B plus C in order to ultimately get this product prepared and designed for you. So you're going to do the daily hospital indemnity benefit of $10. You're going to do a daily nursing benefit of $10. Max out the benefit period, 90 days. Max out the waiting period, 100 days. Basically, you're not interested in what that really impacts and costs. Then you go back in and you look and you say, okay, we're going to max out the home care benefit at $1,200 a week, which is basically 7 hours a day at $25 an hour. And remember, if they use less, they keep the cash for future care. But somebody wants a maximum home care for a 70-year-old woman. The premium is, and you can literally see, the premium is $103.62 for the home care benefit. So yes, in order to get that home care benefit of $1,200 a week for 52 weeks, you are paying $2 for the daily nursing home benefit, $2 more for the hospital indemnity benefit, so your premium's $107. And yes, by the way, if you go into the hospital, you're going to get, $10. You'll get your money back. But this is ostensibly a way to do a very affordable home care only policy for men and women up to age 89. And I would think that that would get many of you positive and excited. What I did is I wanted to run, because as I say, the association's phone lines ring continuously with people who are looking for a home care benefit for an aging parent or for themselves. So I ran numbers for an 82-year-old single woman, $900 a week. For an 82-year-old single woman, which is the equivalent of 5 hours a day, 7 days a week, times $25 an hour, $155 a month for a home care only benefit from a leading company like Aetna. Now, a couple of really important things for long-term care insurance producers to understand, again, why I am passionate about short-term care insurance and information that you should understand compared to traditional long-term care insurance. The first is, traditional long-term care insurance, everybody is always familiar, certainly consumers are and agents are, with the elimination period. But with traditional long-term care insurance, there are actually two hurdles that a consumer has to jump over or meet, let's call them hurdles or obstacles. I had this image drawn because I'm a visual person, and I think this is and so I grasp images far faster than I do words. So to qualify for a traditional long-term care insurance policy, there are two hurdles that have to be met. The first is the 90-day certification. A doctor, somebody has to look and say, yes, Mrs. Jones is very likely to need care for 90 days or longer. These do not exist, by the way. These hurdles do not exist with short-term care insurance. So and so many agents who are talking to consumers and saying, well, you know, you're going to have a need for long-term care. Certainly seniors understand, they get older, they need hip and knee replacements, they need, you know, surgeries, they have falls and fractures. All of those conditions today almost never will meet the 90-day certification. You get a hip or a knee replacement, you are up and mobile far faster than 3 months. So the doctors will not certify unless there's some complication, okay? Very few, you know, long-term care insurance claims, even with a 0-day EP, don't make it to day 90 for skilled nursing home, you know, care or for care often in general. Short-term care insurance, because it's not filed as tax-qualified long-term care, these are health policies, do not require that. So you do not have to meet that 90-day certification, and if you add a 0-day elimination period, you qualify for benefits upon meeting, you know, the policy requirements. And that is a significant benefit. Everything that you need to know about this product is really on the Aetna Senior Supplements Insurance website, and you know, again, once you are appointed with us, and you'll have access to everything that you need. They do a really good job of educating people, and we will obviously continue to do more. So let's focus on selling this product. Here are some of the key benefits that I believe are important for long-term care insurance producers who want to successfully sell this. Just to recap, home health care benefit, really significant. That is what consumers want. And even though we all keep reading about nursing home, long-term care insurance is really nursing home avoidance planning. People want care at home. This product provides it. Unisex rates. Most traditional long-term care insurance policies today are sold to couples. The industry has basically completely now overlooked women who are alone, either because they're single, divorced, widowed, or understand that at some point they will be single, divorced, and widowed. This is a real opportunity to help a segment of the market get protection, because women who are alone typically have lower incomes, lower savings, lower retirement plan assets, pensions, etc. They cannot afford traditional long-term care insurance. They can afford this product. Up to issue age up to 89, simpler application, no 90-day certification. I will tell you that no product, in my belief, is a layup sale, but if you approach prospects in the right way, I think you can do it. And what I mean by that is I always have advocated a good, better, best approach to long-term care planning discussions with consumers, I think it's like buying a seat on an airline. Some people are going to fly first class. Some are going to fly business class. Many people are going to fly coach. Many of us are only going to fly coach. And airlines give people a choice. Many long-term care insurance producers have for years advocated a one-size-fits-all solution, typically recommending the best coverage. They've tailored the best coverage, no longer talking about 5% compound inflation, or certainly no lifetime benefits, but they've tailored it down, but they're still going in with a one-size-fits-all solution. We will advocate to consumers a good, better, best approach, and I believe if you want to be successful, you should do that. With good coverage today being a one-year short-term care policy with no 90-day certification. Better, yes, better is a traditional long-term care insurance with a 3-year approach, a 90-day certification, a 90-day elimination period. We are currently in a very low inflationary cycle, and that, unfortunately, is with low interest rates. That's what makes traditional long-term care insurance policies expensive today. And so, you know, a better approach currently is a policy that has no inflation growth or allows the individual to add more. And the best coverage is obviously 3 years with inflation protection. Lastly, I want to reinforce, because there are still, after 20 years of an industry marketing long-term care insurance and really focusing on I don't want to call it scare tactics, but that's really what it is. Scare tactics about, oh my God, nursing home, nursing home, nursing home, and the average length of claims, and all of the stuff which makes people look and go, I need long coverage, and when they get and look at a proposal for that, they get sticker shock. I want to reinforce that 41% of long-term care insurance claims last less than 1 year. And so if you are offering people good coverage, which is short-term care, you will not be doing them a disservice. They will have some coverage, and some coverage is always going to be better than none. And remember the power of restoration of benefits with this policy, so that, one, they actually can get, if you read the policy contractual language with the restoration of benefits, they really have the potential to get far more than the 1 year of care. And I was discussing this earlier with really a specialist today in the industry, and I was saying, think of a single woman on her own who's looking and buys this at age 75 and falls and breaks a hip at age 80. It's very likely that this person is going to use and should use their policy for a reasonably short period of time. They might be recovering after hip replacement at home for a 3-month period where they're going to need home care, or a 2-month period. They can use this policy then and restore it and use it again in the future. That is the beauty of this policy, again, especially why I'm very passionate about it having value for women who are on their own. And lastly, or not, I think this is the last, why is 360 days can be better than just good? That 90-day certification that exists in long-term care insurance policies helps keep the premium lower than it would be if you took it out of that. But there are hurdles, and for many, many people, a short-term care policy is going to be better than just good come benefits time. Oh, yes, and did I forget to tell you, up to age 89. I mean, just think of the clients that you've that been declined and that could have qualified for this. So, lastly, a couple of marketing strategies. Many people look at short-term care insurance policy as what they call a plan B. Oh, we're going to wait until somebody is declined for traditional long-term care insurance, and then I'm going to come back in and talk to you about an option. I will tell you that consumers are, first of all, wary of insurance agents altogether, but I would view that as a bait and switch. I believe you will have greater success when talking to people, and when you sense a decline is likely, bringing up the short-term care alternative right at the beginning of your presentation. How strongly you want to do that is up to you. You might actually literally present it, or you might look and say, listen, it's very likely that one of you is going to be declined. And when that happens, many people say, we're not going to do anything. So I'm either going to talk to you now about a plan that will get you both covered and explain two different options, or I just want you to remember that if I'm right, if the company declines you or your spouse for traditional policies, I'm going to come back with an alternative option that you should consider, again, because some coverage is better than none, and having no coverage is really going to be worse for all of you. I've spoken quite extensively for women on their own, so I won't spend a lot of time. You can see this. Many women over age 65 believe they are priced out of the long-term care marketplace. They read all of the articles. They've seen everything out there about, oh, long-term care insurance premiums, $2,000, $3,000, $5,000 a year. Interestingly, consumers don't see the word year. Some of them think that it's a month. Okay, even when insurance companies send out renewal letters, they don't see that the premium is increasing to, $4,000 a year. They see it as a month. Tell women on their own that they are wrong. Covering the 90-day elimination period. A lot of agents, a lot of long-term care agents today are using short-term care policies to cover the elimination period, which I think is an interesting strategy, and it is important because 90 days is a long time, and again, don't forget, you also have the 90-day certification that exists there. So this is a valid strategy for LTC producers, certainly to do. And also reapproaching declines. Yesterday I was talking to two very savvy specialists who've been in the long-term care insurance marketplace for many, many years and have lots of clients who have aged, by the way, so they may have been declined when they were 75, and now 4 years later they're 79. It's really important to approach them and tell them that there is now an option available in name of state. It accepts applicants up to age 89, provides up to a year of home care, which is what these people want. There are basically yes/no questions, no cognitive test, and most importantly, affordable rates. And if I were marketing to them, I wouldn't ask them to call you or to do anything like that because they're going to be wary. My offer would be, let me send you the 11 yes/no questions and see if you can obtain this coverage. If you can answer, if you can answer properly to all, as we said, 3 yeses knocks you out. If you have less than 3 yeses, this is something we should talk about. If not, hey, I just thought you should be interested and available. What's the market in closing for Aetna short-term care prospect recovery care product? My view is that this is a viable product, very viable product for long-term care prospects 65 to 89 when cost, age, or health is an issue. And when you think about that, there are an awful lot of prospects in America between 65 and 89 who cost or age or health or a combination of these three is going to be an issue. So you really have lots of prospects out there. So some of you who are watching this as we broadcast it live are not appointed with the National Advisory Center for Short-Term Care Information, and we welcome you, but we'd love to get you appointed because one of the things, so there are several things that we're going to do. First, if you liked this broadcast, we are going to be training agents specifically on how to effectively market short-term care, and that will be exclusively available. Broadcasts like this will ultimately only be available to those who are appointed under us. And then we'll have access to the second side of the organization's website, which is for producers only, where recordings of this and other webinars will ultimately be housed. So that is one thing. The other thing that we're going to do, which is really my passion, is I create highly visible, effective marketing tools for agents to use. These will exclusively be available to agents working under the center's hierarchy. They will be personalized, so they will be effective, powerful, visual. Like you can see here, this is one that we just did that does not mention the Aetna product, but that will talk about a planning option up to age 89. And these are going to be included with your photo, your name, your contact number, so that you can send it out to prospects and clients and use. These kinds of tools are going to be made available free for our agents, and basically you sell a policy, you get a tool. We want you to obviously be successful and to sell more. If you are not appointed with us currently and you would like to be, well, why don't you call the organization or send me an email, and we would be only too happy to answer your questions and to work with you. I want to thank you for watching. I want to tell you that my mission over the next couple of years is going to put short-term care on the map in the United States. And I spoke last week to a major actuary with one of the larger combo product companies who looked and said he believed that at some point short-term care insurance would actually eclipse, the number of policies sold would actually eclipse traditional LTC policies. And I thought that was an interesting forecast on his part. I don't know if that will really happen, but I will tell you I believe this is the right product for many, many consumers and for many agents who want to successfully sell it. I know that you will be successful. I want to thank you for watching. If you have questions, feel free to email me or call the organization. Thank you for your time today.